What's going on, everybody? Welcome back to my channel. So I just thought I'll jump on because you guys have requested that I show you a live trade. So I'm just about to jump into pound USD and I'm looking just to take this trade immediately. So I'm just going to hit this with an instant execution. I've already marked out my risk from where price is now to where price could go. So I'm looking around 5-6 pips stop loss here, and I'm just going to hit this with an instant execution over on MT4. So my actual entry on MT4 is 22,153. There you have it, 22,153. We'll have stop loss above structure, which is 6 pips here. 6 pips, and then over here we'll be going for our 1 to 3 risk reward ratio. So this is how the trade is going to be set up. So this trade now is in play. Now I'll go into details about this trade. As you can clearly see, looking at the structure of this market to the left, we can see that price has come back to this level and we can start to see a reaction. Price is not able to break above this level for quite some time now. In actual fact, about 15 minutes, showing strong signs of a failure to break above structure. On the same note, we can also see that this market structure has been pushing really strong to the upside and at the same time hasn't really exhausted this move. Now, when I go to the hourly time frame, what I do identify is that the market has come back into a previous lower high formation on the hourly time frame where it's retesting now, and more often than not, around 90 to 95% of the time when the market comes back to these levels, what you will find is that price will react off these levels either to the downside, well, more often than not to the downside, before it decides to continue up. So the aim of this game is just to take advantage of this small reaction, and then as the trade starts to move in my direction, we'll lock the trade in at break even when the opportunity presents itself. So I'm just simply going to be waiting for the market to move 6 pips in my direction to be able to lock this in at break even, and then once it's in at break even, we'll come back and revisit this trade. So we'll set an alert right here, and then we'll see how this one plays out. I'll be back once we hit break even. So guys, I'm back. We are almost at break even now. You can see the market is now just starting to pump in our direction. So we'll just lock in that trade just to make sure that we're covering our profits here. There is no reason really for us to be sitting in this trade and giving back any of our profits. So this will be locked in at break even, secure the trade, and now we'll just simply wait for the market either to come back, stop us out at break even, or we'll hit a TP on this one. So we're moving nicely in the direction that we need the market to go. Currently we're sitting pretty comfortable. What I'm going to be looking to do on this trade is take off some profits around 1 to 12, which is in and around these levels here. So we'll mark this level, add an alert, and then we'll be back for this trade. Well, we may not be back now because you can clearly see here the market is moving. So let's just see what's happening over here. Yeah, we'll take off some profits right now on this trade. So we've taken off some profits in and around this level here. So that's completely fine. We're looking at a profit, looking to take this trade into break even profits once the market moves to our 1 to 2. So let's see what happens here. Looks like it's moving now in our direction, which is pretty decent. There you have it. There's our 1 to 2. So now we'll lock this trade in at break even profits, and then we'll just see if we hit the home run on this, to be honest with you. So this is 122, 133 will do. There you have it. So now we're nicely in profit. So we've got our stop loss at now 22,133, 22,133. We'll leave it here. This is completely fine. So this is where we got our stop loss now. So we'll trade that in nicely. Very, very good. And now we'll just see if we hit this home run. So pretty simple trade here. As you can see, the market came back to this key level. We had a reaction from this level showing that price was unable to break above structure. And then as you can see, we've had a very nice move to the downside. What we're going to be hoping for now is to see if the market gets back down to these levels here to hit our take profit. And if not, then we've secured 80% on this position already. So still nice and comfortably, and at the same time we've got our stop loss in profits. So pretty simple trade, and I hope you guys have enjoyed it. Just a little lesson for you, if you're going to take anything away from this one, is I've actually hit take profit on this trade on my MT4. So the take profit on my last position was 22,003. So 22, this was my take profit here. So I'm actually out of this trade now, full position closed. But let's see if we hit this full run on 1 to 3, it'll be pretty nice. But regardless of the point, there's no money on the line right now. We've banked what we've needed to bank, so we'll move on to our next trade for the day. But just if you can draw one lesson from this video, is just to really understand that when the market comes back to key levels, more often than not, you are going to get a reaction from these levels. And as you can see from the hourly time frame, price came back to a lower high structure, as you can see here to the left. If you're not familiar with this, then what we can do is break this down very nicely using a lower time frame analysis, and then you'll start to see structural lows being violated. As you can see here, the overall consensus of the market is a downtrend, and we can see this lower high formed continuation to the downside. Once this hourly candle is pushing strong into this key level and the candle has met its range, more often than not you will get a reaction. And as you can see, this reaction is pretty violent, to be honest with you. Didn't expect it to be this violent on this hourly candle, but there you go, it's worked out in my favor. Take profits have been hit on my side, and that will wrap it up for this trade. As you can see here, take profits have been smashed. But timer off, and what I like to do when I'm trading the 5-minute time frame is I use my my watch just to pop on a timer, just to make sure that I'm not looking at my charts all of the time. Obviously, just for this example here, I've kept the recording on, but more often than not, I'll just set a 5-minute timer on my phone so that you guys can see what I'm doing. So yeah, back to the point. More often than not, when price comes back to a key level, you will find a reaction from that level. So what a lot of people will end up doing is they will look at the charts and they will say to themselves, well, look, this is a structural level here that I'm working with. This is a structural level here that I'm working with. And what you'll find is a lot of traders will be selling these levels and selling these levels and selling these levels. And as you can see here, they'll be selling these levels. But there's a few things that you need to understand when trying to sell these levels. First and foremost, you want the market to be pushing in your direction. You want to see these wick rejections. If you go in for this trade, you have to understand that if you're planning to take it, you're going to have a stop loss way above structure. So now look at the range difference to the trade that I took compared to the trade that you will be taking. You know, you don't give yourself the highest probable opportunities to get that trade to a break-even trade, because the range of the stop loss means that you're going to need this exact same range back to the downside to secure this trade. The next level that we're looking at as a potential level is when you see the market coming back to these lower highs. What you have to understand is that these are minor lower highs on the 15-minute time frame. The major lower high is this one here. More often than not, the market will come back to these major levels first before it decides either to continue to push up or continue to sell. It just, for some reason, the markets are attracted to these levels. So when you see the market coming back into these levels here, you start to say to yourself, well, is this a sellable opportunity? Truth is, it looks good. You see the wick rejections, X, Y, and Z. But again, the same thing. If you place a sell here with a stop loss above structure and an entry below the structure, then guess what? You now increase your range of having to go to break even, which means you're asking the market to break below structures that it may not be able to do. The next thing you need to focus on is what happened recently at current price action. If this was the lower high you was expecting the market to make the new lower low, and it doesn't make that lower low, and then you have this strong bullish candle pushed to the upside, then guess what? That's indicating strong bullish candle. That means more than likely the next candle or the candle after that is going to continue to push up. So what you want to be doing is finding those key levels in the market that you can work with, i.e. in and around here, which is the major 1H time frame. Then you can start to scale down to your lower time frames. It's really up to you how you do this. And then you can start to look to see how price is reacting in and around these levels with these wick rejections. Is price able to break above this major key level in the market, or is it failing to break above? When you start to see it failing to break above, then having a stop loss above these structures is absolutely fine, simply because If the market is going to go down, then you don't need to be sitting in drawdown. You don't need to wait to see if the market is going to pull back and go break above the structure and break back in. You just trust that the market is going to respect this level and go down, so you can have a very nice stop loss, and then you can be able to hit your targets within a very short space of time, risking whatever you want in the stop loss. 6 pips, 1 pip, 10 pip, that didn't make sense. 6%, 1%, 2%, whatever it is you want in the stop loss. Pips lie, percentage doesn't. And then you just take the trade. And when you're looking at this, what you're more likely to see the market do is come back to some of these structural lows here. Now, granted, I didn't hold it for this long. I did close out around 1 to 3, which is completely fine. That's all I need for the day. And if I want to get into another trade, then my strategy allows me to do that. But that's just the overall viewpoint on how I see the market, how I trade the market. And it's pretty simple. And I just do this over and over and over again for as long as the market gives me opportunities. So I hope you've enjoyed this video. Just a little breakdown. Sorry that it was a bit muddly at the beginning, but I'm trying to take this trade, concentrate on managing this trade, etc., etc. But I do hope you found it useful. You have requested it. So if you do like the video, please smash that like button. Subscribe if you haven't. Until next time, take care.